Hey investors, how are you? If you use the eToro platform and already are a copier or thinking about copying, this video is for you. I am here to talk to you about my investment strategies, the reasoning behind them, and how you can maximize your profits. Important rule is to always follow Peter Lynch's rule, which is buy what you know. Buying what you do not know is pure gambling. I always buy companies with products that I like, believe, or use. As a software developer, I tend to hold tech and hardware companies, which is my field of expertise, and this is what allowed us to profit on AMD and Apple's 2020 big surge. I keep updated on the news cycle on famous TV shows like CNBC Fast Money and CNBC Mad Money with Jim Cramer, and this gives me a better feeling of the general market. And I use online tools like investing.com, Seeking Alpha, and the investor pages on the companies themselves to keep on the specific knowledge on specific companies. You can see on my eToro daily feeds all the news that I post daily with the latest news, and this gives us a better insight of what's happening, and so we can make better decisions altogether. This information is used for momentum trading, which is a combination of news cycles and technical analysis, which defines as good entry points and exit points. During 2020, we had some examples of this, like Tesla and NIO. And this way we can maximize our profits. I do not like to compromise with any given asset at any given point, so we tend to buy gradually going up or going down small positions instead of having one big position. This is our main strategy to control risk, as we can further control our exposure to certain assets if the price drops too down, and we can minimize our losses. If you check our portfolio, you will see that we always keep some cash in hand, looking for the next opportunity. One other technique that we use is hedging, by using shorts. During the COVID-19 pandemic, we had a major market pull down. If you check the Nasdaq index, it dropped around 30% in the March month alone. And if you check our portfolio, we only dropped 1.12%. As we daily follow the news cycle, we sold some positions and we actually purchased the sell position on the Nasdaq as the index went down. This allowed us to negate some losses while the market was going down, and when the month ended, we had some more cash and we can bubble up in the next month. If you check April, we had some big profits there. One more property that we like is a famous concept popularized by Warren Buffett himself, which is we are looking for companies with good moats. This is the ability of a company to maintain its competitive advantage over the competitors and allow long-term profits. One way for a company to improve its moats is through acquisitions, which can expand the current business or simply buying out the competitors. Companies like Adobe excel at this. With their unique lineup, they hardly have any competitor. There are also some markets that we do not invest in. For instance, oil. I truly feel that we should take care of our planet. I am a strong believer in global warming, and we should not use these companies to try and make money. This is also valid for shady management teams, for instance Wells Fargo, which have a lot of unknown stuff going on about how they treat their employees, and so we just stay away from companies that do not value their employees. There are a lot of hidden opportunities in the market. We just need to study, and we need to further understand what's the company's purpose, and we do not need to put money in these companies. So why should you invest in me? I am very dedicated to the platform. You can see my daily feed with daily updates. I keep constant communication with my followers and copiers, and I always try to ask them for their opinion, because collective knowledge is always better. Also, on a monthly basis, I do an update on how our portfolio is against the major indexes, and so far we have beaten the indexes every single month. If you are thinking about copying our portfolio, I advise you stay at least for 6 months and always copy open trades. As we are a midterm investor portfolio, we tend to keep all our positions open for a couple of months, and if you do not copy open positions, it will take a while for the money to be applied somewhere. After that 6 month period, if you are happy with the results and you want to increase your cash in the copy, if you are thinking about adding more than 30%, I suggest you just stop copying and redo the whole thing again, because the 30% money will only be allocated on new positions. So if you close and open all the positions again, all the money will be used according to our portfolio at the given time. Thank you for watching this. If you have any question, feel free to leave them in the comments down below, or just reach me on the eToro platform directly and I will answer them as soon as possible. And remember, words from Mr. Buffett himself, the stock market is a device to transfer money from the impatient to the patient.